So Rishi Pilani is Chairman and Managing Director of Ganesh Benzoplast, who is joining us on the show today. The trigger or the main peg is that the company is going to issue shares to promoter entities along with Malabar Funds, which is very respected portfolio management and AIF here out of Mumbai, Malabar Funds. Rishi, afternoon. Thank you so much for your time. The popular the version is that whenever a company or a promoter set along with some marquee investors are infusing funds into the company, that actually is a reflection of the confidence in the cycle the company is in and the near to long-term outlook. So what are the triggers? How the funds raised this way are being utilized? What's the outlook?
Yeah, so thank you for having me. See, the fund utilization is very directed towards, we are building a new LPG terminal in JNPA, which is the premium port of India. And so to complete that project, we need the funds. And we do believe that this project is a very big step jump for the company in terms of its growth and revenue and profit potentials.
Point taken, Rishi, but I'm just wondering, why not take debt on the books? Because your debt right now is very low. It's sub 20 crores, 0.05x in terms of debt to equity. Wouldn't it have helped you better to improve your ROEs?
Yeah, so the project is going to be a mix of debt and equity. So definitely this power portion is only going to go towards the equity, and we are planning to raise debt also to complete the project.
What would be the amount of that debt?
It'll be close to approximately 350 or 400 crores.
Okay, Rishi, I was just looking at your stock tracker, and if you could just pull up the last 1 year chart. The industry which you cater to, chemicals, that has gone through a rough patch as well lately, as far as the industry goes. And now there are early signs that the chemical cycle is turning favorable once again. Talk to us about your big clients and the industry you cater to right now, and also this new LNG terminal. How much can, once it is up and running, which may take some time, how much will it catapult your earnings to?
So it's not an LNG terminal, it's a LPG terminal.
Right.
But just so coming to our main client, so on our we are one of the largest liquid chemical storage providers in JNPA. So we are catering to all the top clients, including Asian Paints, Jubilant, Reliance, Deepak Fertilizers, Deepak Nitrites. All of them have short and long-term contracts with us, which are and we provide a very niche set of tankages, which is stainless steel, heated, cooled. So we are catering to all sorts of chemicals to be handled, which is a very unique proposition. For the new LPG project, so what we are creating is almost a 60,000 KL, a 60,000 ton terminal, which is approximately 120,000 KL. And we are hoping that once this commissions in about 2 years' time, we are able to add approximately, of course, this all depend on what turnovers we get, but based on our current projections, we can add almost up to 150 to 200 crores to our top line.
150 to 200 crores to the top line. That's interesting. But Rishi, we're also doing some, a backward integration in the sense that you are getting into railway logistics as well, which will help you to evacuate faster from the ports. Talk to me about that. How's that really ramping up? What kind of revenue potential and synergies do you see on account of that?
So that project is really taken off well. In fact, Cargill, which is one of the world's largest agri-commodity companies, now exclusively uses our rail facilities for their raw material transportation. And we are looking to extend that into the new LPG project also, so that we can evacuate LPG also through rails. That is also being explored on the cards.
Okay, so that's also something which has been explored on the cards. But talk to me about the overall business in terms of the capacity utilization, let's say at the Cochin one and the other terminals as well. What's the utilization right now, even in terms of JNPT and Goa terminal, and also in terms of revenue? I think last year you clocked revenue of around 420 odd crores for, let's say, FY 24 and 25. what could be the total revenues?
So regarding capacity utilization, see in Cochin and JNPA, we are absolutely full. We run 100% or more capacity utilizations. In far as Goa goes, it ranges between 40 and 50% because the business there has been impacted with the mining ban. But we are looking to switch to different products to overcome that. Yes, see on console basis, the overall group revenue was approximately 420 crores or something last year. And while I can't give exact numbers, we always look, we always hope to grow at least by reasonable 5, 10, 15% number every year. That's the aim of us as a management.
Okay, so 5, 10, 15% kind of growth is what you're envisaging in terms of your revenue as well. But what about margins? It's been around that 54, 55% mark. Is that the expectation going forward as well? And in terms of the rental yield, do you see an opportunity to probably reprice, improve your rental yields as well?
So we are continuously repricing our rental yields, and that's why if you see that even with in spite of the costs going up, especially after COVID and all, the costs have all gone up a lot. Still, we managed to keep our margins intact or even grow them a bit. Um, Going forward also, our obviously as management, our attempt is to keep on at least maintaining what current margin we have and keep growing it by at least 4 to 5% every year. That's the target we keep.
Okay, fair enough. On that note, Rishi, we let you go and all the best for the coming quarters as well. So overall, a good trajectory lined up in terms of the capex plan, the kind of fund infusion that they're envisaging, as well as the growth outlook of the company. The stock is holding up in the green as well.